Hey, TikTok, Jim Malone here, coming to you live from Dallas Trading Floor. And on Periscope, it's pscp.tv/Dallas Trading Floor. And I think we're now live both on TikTok, Periscope, and on YouTube. So, interesting day today. It's I mean, the rally is continuing. It's nice. I made a trade earlier this morning, which I will be talking about today on Facebook. It looks like Facebook has exceeded a buy point, and I've got some very nice buy points on 5 other stocks, which may be of interest to you. My trade from yesterday on on Nvidia is doing great. So I'm pretty happy. It looks like things are moving very nicely. In some really interesting news, it looks like it looks like TikTok is poaching some uh, some talent from Disney. As a matter of fact, a top Disney representative moved over to Facebook. So I mean to TikTok. Here I am saying Facebook, and it's pretty interesting. I don't know what's going to happen there, but TikTok is probably the fastest growing of all of the of all of the of all of the social media platforms, which is really amazing. Which I've only been on TikToks for about 2 months, and it's just been tremendous. And everyone here, I so appreciate taking a look at me on TikTok, which is really great. Just wanted to get into it with a few things here. For those of you who can take a look at Periscope, I'll be showing you these charts. For everyone else, hopefully, hopefully you'll be able to see what's going on here, and hopefully I'll be able to give you some insight into the market today. Again, as I said, I entered this morning. I entered a Facebook trade, so I want to basically go over that first. This is the trade of the day. It's on Facebook, and Facebook has been the worst performing of all of the FANG stocks. I think that's about ready to change because it looks as once again you can't keep the FANG stocks down. It's just really it's really interesting. It just keeps moving and moving up. So as the country opens up, people are interested in still interested in the FANG stocks, still interested in Microsoft, still interested in Facebook and Google. So it's interesting. It's interesting to see this. Here is a explanation of a trade that I think is still good. I think is still is valid. I mean, when I was putting this chart together, I made the trade and then I put the chart together and it moved so fast I had to change the numbers on it because it was moving up so quickly. But basically, this is a 10-day covered call trade. I mean, I'm really kind of a covered call guy because that sort of my bread and butter trade. Try to make about 2 or 3 of those a week. And then I have longer term trades, but this is a 10-day trade. Um, very nice cup pattern, well above the 40-day moving average and basically into a buy zone. Even with all the problems with Facebook, it's still one of the top performing stocks out there. So basically, here's how the trade works. Buy 100 shares of Facebook, and when I did this, it was trading at 216.71. Then immediately go out and sell a uh, a, a call on that. The call I sold was the May 29th 220 call, and the proceeds I got on that was 320. It's actually gone up since I made the trade. It's up to $5 already, which is pretty tremendous. That'll give you about a 1.50 upside potential plus the premium on the call. It for a 10-day trade, it's coming in right about 649 potential profit if it exceeds 220 on the 29th, which I think is fairly likely, basically because it's moving beyond this. It's moving up into the new range, which I think is fairly likely. This will produce approximately a 109% gain, 109.5% gain annualized over a year, or in the 10 days, basically will produce about a 3% gain, which it's investing, at least for me, is all about hitting singles and doubles. Sometimes you get a home run, but most of the time it's singles and doubles, and this is just a good bread and butter stock. For sake of full disclosure, I have another play in the stock. I have a 215. So this is, I just sort of doubled down on this when I saw it making the nice movement today. And it's up significantly, and I think it's going to move beyond this buy point. That's the thing, and this is a hard thing to learn, but I learned it, and it really served me well. And that is, when a stock moves above a buy point, that's when you want to buy it. You don't want to buy it below. You want to buy it as it moves through that resistance, because typically it'll move into a new plateau, and hopefully it'll give you a nice move. So that's what I try to do on my singles and my doubles, is I basically try to wait for a stock that is going to be making a move through a buy point, typically with a very good chart pattern. In this case, it's a cup pattern. It's not a cup with a handle. This is not necessarily the very best chart pattern, but it's pretty good. And so that's moving through that and making a nice movement. And then as just right before the movement, that's really when I want to put the trade on. I want to do the cover call trade. Why do I like the cover call trade so much? Well, because even though it does require a fair amount of capital. It's only a few days that you're using the capital, and you reduce your risk significantly. By the way, just for everybody out there, it's always typically better to sell a option than to buy an option. Now, that's not in all cases, because there's some cases where you want to be buying options, but in most of the time, 70% of the time, you're making money if you're selling an option, and especially a call, because it has what they call a theta decay, which is all that fancy word, but basically it's a time decay. So as the option approaches expiration, the option becomes worth less and less, just because there's less time to exercise that. So that's one of my primary strategies, is finding stocks that are going to move higher, putting a call option on them, and then watching that theta decay. And it's a very good way to make very easy money on a stock. So that's just wanted to put that out there. All right, so I have some questions from TikTok, which is always the best source of questions. Let's see. What's VTIQ looking like? Okay, great. Let me take a look at VTIQ just really quickly. Trade on this one is on Alibaba, which is, I normally don't trade, to be honest with you. I normally don't trade Chinese stocks, but I have a trade potentially on this. I don't think I'm going to enter it this week, but if it shows really good numbers, I probably will. enter it tomorrow. Do you listen to Gary Kay? No, I don't. I don't know who Gary Kay is, but maybe I could find out. This is a question from this is a question on TikTok. What is your short-term expectations for the S&P 500? Well, you know, it's always difficult to figure out what's going to happen in the short term, but I am a short-term trader, so I guess I should know better. I think, believe it or not, and I wouldn't have said this a few weeks ago, because I wanted to trade against my technical indicators, but I think the S&P is going to go up. Yeah, I know this is hard to believe. I was expecting a retest. I was telling everybody, wow, I expected a retest of the lows, and I thought, wow, we're going to be retesting those lows, but that's just not been the case here. It seems as if the stimulus, at least for the time being, has worked. So I believe it's up from here. Let's see. Gary Kay from Investors Edge does a market wrap. Yeah, I definitely want to take a look at it. Awesome. I appreciate that. I appreciate that thing. It will retest, just not now. I think you're right, Bobby. I think it is going to retest. I just can't see it not retesting. It's just that right now, it's not a good time to be short because the indicators all say, and these are technical indicators, my gut is that it's got to retest, but my gut is wrong on this case because it's kind of like flying an airplane. You want to look at the instruments, and right now, in terms of the volatility and everything like that, it looks as if, at least for now, the S&P is probably going up. So as we reopen, it should. Now, I expect that once we get the country open, we're going to see, unfortunately, some more problems. I hope not, but I'm expecting, I'm kind of expecting that. I'm kind of expecting problems, but not right now. So it's so hard to judge this. But right now, I could say that the S&P looks like it is going up. So don't go against the tape, please. Yeah, that's probably true. I think you're right. I think once these numbers are in, in the second quarter, it's going to be a friggin' disaster. And the weak sisters, the ones with high debt, and I'm going to try to cover that in future shows because I'm out looking. I'm on a bear hunt, and I'm looking for companies that have high debt loads, like Marriott. Now, I wouldn't short Marriott right now because I think that a lot of people are shorting it, and you might get caught in a bear trap, which is a short squeeze. I don't know if you want to do that. I think it will be time, but not now. So it's tough to figure out. Hey, Jim, had a great trading, made $20,000 off of Baidu. Nice. And Workday. That is excellent. Oh, by the way, right now, I think you want to look at BABA. I really do. I think you want to look at BABA. BABA. It has a cup and handle, and it's got a 216.20 buy point. I think you want to look at it. I think that there's some money to be made there. I may enter the stock after I get off the show because I do think we're going to see some movement in BABA. The Chinese stocks have been on fire today. It looks as if, hey, we may be reopening, and then when it reopens, I think that'll be awesome. An awesome trade there, by the way. I just want to give a shout out to you. So let's see. Oh, wait a minute. Okay. Can you pray for me? I'm getting. Oh, geez. I apologize. Yeah. I hope you're getting. Yeah. That's a terrible thing. When can we get the buy point values? Okay. I'm going to give you some buy points right now. If you get out your pencil and paper, I'm going to give you 6 buy points right now, and I think these are pretty good. AMD, Advanced Micro Devices. We're looking at an entry point of 58.73. Okay, so that's the first one. AMD 58.73. BABA, one that I'm not in. I want to be in this one. I just think that BABA is going to do great. I know that I shouldn't be rooting for the Chinese companies. I'm definitely, kind of an all-American guy, but Baba's looking really strong. Cup and handle showing a new 216.20 buy point on Baba. I know these are kind of expensive stocks, so you don't necessarily have to go in and go for 100 of them. If you want to participate, maybe go in with 5 or 10 shares. I think Baba is really strong. Facebook. This is one I absolutely love. I entered, as I say, earlier in the show, I showed you a cover call play that I am making on Facebook. I am in Facebook. I have got 2 positions in Facebook. One position that's expiring at the end of the week, and the other one that is expiring next week on the 29th of May. The entry point for Facebook is 215.38. 215.38. So if it exceeds that, that's when you want to be buying it. You don't really want to be necessarily buying it. You might want to buy it a little bit before, but only if there's momentum, because that's resistance, 215.38. Now, another favorite that's a little bit lower price, great stock, great. The chips are really coming into their own right now. I made a trade on that's going to be expiring at the end of the week on NVIDIA. I've done very well on that. Intel, INTC is the symbol on that. It's got a cup with handle, which is the best chart pattern, by the way. And the entry point on that is 62.23. 62.23 on that from Intel. So that's another one you want to look at. There's another stock out there called ServiceNow. I don't know if you're familiar with it. Very good company. The symbol on that is NOW. It's unfortunately, this one, you don't want to buy this one right now. It's out of the buy zone. It sucks because this one moved too quickly and I wasn't able to really, shout it out. But this one is out of the buy zone. The buy zone is basically the entry on this one, and it's beyond this is 363.05. If you want to find the buy zone, now what is the buy zone? Well, when a stock reaches a buy point, you want to buy it within 5% of where that buy point is. So you can always calculate a buy zone on a stock if you know the buy point by multiplying it times 1.05. And that will give you the buy zone. Now, unfortunately, ServiceNow is out of the buy zone, but I just wanted to put that out there. Now, coming up next week, I think that if you can get into this, I think it's going to move really nicely as the economy opens up. And of course, that's my old friend Tesla, TSLA. It's got a new cup and handle, and the buy point on this one, 869.92. Now that sounds pretty high. It really, it definitely is. I've been trading it up and down, and Tesla is really a trading stock, but if it exceeds that 869.92, I think it's probably going higher, and it may it may actually test its blow off top. And remember, the top of Tesla, 969, I believe, was 969 on early March. It was about March 3rd, I believe, on that. I was in the stock, and I actually exited the stock because I had a stop loss. Now, when you're playing Tesla, set your stop losses extremely tight, because when they come out, when they unwind very, very fast. And if you're playing Tesla and it's moving up, move your stop losses up. Make sure that you have about at least no more than about a 6% margin preferably a 5% margin on that. What I mean by that, if stock moves up, you want to move your stop loss up, just so that if it reverses on you, you can capture some of that gain. So those are the thing to reiterate. 6 stocks near the buy points right now: AMD 58.73, Alibaba 216.20, Facebook 215.38, Intel 62.23, ServiceNow 363.05, and Tesla at 869.92. So there is some good stuff to chew on. Hopefully you'll be able to capitalize on that. I hope, because it definitely is worthwhile there. Okay, so those are the buy values. Let's see. Let's see. How do you determine buy points on a stock? Very good question, Johnny Cash. I love the name, Johnny Cash. Here's how you do it. You could eyeball it, and typically you don't want to buy a stock unless it's making a new high. You're like, why? Because everyone tells you to go down to the store and buy a bargain, right? You want to buy stuff on sale. Well, in stocks, it's really the opposite from that. You don't want to buy stuff on sale. Why don't you want to buy stuff on sale? Because it's on sale generally for a reason. And so stocks that make a new high typically form good candidates to buy and hold, because you buy them, you buy them high and you sell them higher. I know this is a very weird concept. So typically you want to buy, if you just did this, nothing but this, you bought stocks on new highs and then you raised your stop losses and kept them within 5 or 6%, guess what? You're going to outproduce the S&P 500 almost every time. I know that sounds weird, but it's been done for years. So a buy point typically is at a new high. Now, is that the only thing that makes up a buy point? No. Typically, to have a buy point, you have to find where the stock is experiencing resistance. Stocks tend to trade in bands. They tend to have a floor and they tend to have a ceiling. And then if they break through that ceiling, that's when they break resistance. Or if they fall through the floor, then they're going to move to another lower range of trading. So these buy points typically are usually at higher highs, typically with a very good chart pattern. The best of the chart patterns is this chart pattern called cup with handle. And you can find out what this is. Just Google it. It will show you. Another one is cup without handle. And sometimes, there's what they call double bottom. There's a lot of different ones, but there's really 7 chart patterns that make for very good trading. And cup with handle is typically the best. Now, do I look at only stocks that have cup with handle? No. I want to buy stocks that typically are in the very best of the very best. So I also look at relative strength. And what relative strength is relative strength is where you have very good you're outperforming the rest of the market. I typically like relative strengths of 91 or better. That means I want a stock. I don't even want to buy a stock if it's not trading in the top 10%. And then added to that, I want to trade them in the very best sectors. So that's one of the reasons why I am very heavily in the technology sectors because that has been producing some of the biggest winners in this last stock market rally. Now, that may change. I mean, we may have a rotation. That's what when they tell you what a rotation is, that's really what it is. They're moving out of one kind of sector of the economy to another kind of a sector of the economy. There are a lot of great sectors, for instance, in the oil sector, but the problem is the sector is underperforming the market. So it's a very hard place to make money. Now, you can make money there. Don't get me wrong. Exxon and Chevron are great companies, but that's more of a, that's, but you know, if you're just buying value, you're not probably going to do as well than if you buy stocks that are typically being bought by the funds. And growth stocks typically are their growth for a reason. People will tell you, well, I want to buy the great dividend stock because it pays dividends and I can always get this money. Well, this is not really a good strategy, and I'll tell you why. Because part of the reason stocks pay dividends in the first place is to keep the long-term capital there. They don't want it to go away. So they pay dividends. Now, growth stocks, on the other hand, they attract capital just because they're growing so fast. And that's what we see in plays like Moderna and some of the biotech stocks. Now, do I recommend biotech? No, because that you want to make sure that the stock has some legs too. So growth for growth is not the only thing. You have to kind of look at stocks in the way of where is the money flowing in the market. And right now, the money is flowing to stocks that are heavily invested in the stay-at-home telecommuting economy. Stocks like Zoom, stocks like NVIDIA that make video chips for AI. The world is being digitized, so right now the software companies and the hardware companies that are in this space are good, but are all of them good? No. I mean, some of them are laggards. I mean, for instance, HP, when they split into two companies, HPE and HPQ. Well, HPE has not been doing well. HPQ may be doing better. It's a mature stock, and it doesn't have the characteristics like some of these higher flyers. That may be changing. But one thing I want to say is that, when you're investing, you want to look at where the growth is and where the funds are going. That's where you're going to find your best deals. Do you okay, so that's the pretty good. All right, let's see. Like the SPY is doing right now, trading sideways between support and resistance. Absolutely, Bobby, you're very, very right. Right now, the SPY seems to be in a trading range, and I mean, if it goes above, if we go above, then I think that all hats may be off. But when the market is trading sideways like it is now, one of the best strategies to employ is a covered call strategy, finding stocks that are breaking resistance and then selling covered calls on them. This is a very, very good. I like markets that go sideways because I can almost always make money in them. The markets that I find the hardest to deal with are the ones that are just rocketing up. I know that sounds really weird, but it's hard because typically when stocks rocket up, they tend to snap back quickly too. So it's a harder market to trade. I like to trade a sideways market, and I like to trade a downtrending market. It sounds very odd, but those are the markets that I particularly like to trade. And I especially like a sideways market because it allows me to calculate many short-term trades that pay off. So that's what I'm trying to put out on my channel on YouTube are some of the potential that you can do there. So let's see. Now, see, I have another. Now I'm talking about this is a right now on my YouTube channel, youtube.com/Dallas Trading Floor. I have a buy zone chart of Alibaba right now. Currently, the buy zone for Alibaba is 216.20 to 227.01, and the volume is up. It's up $4.30 today. It looks as if the Chinese stocks are doing well today, so it's interesting. Even with all this trade tension, even with all the coronavirus stuff, it looks as if the Chinese stocks are doing really well. I think that we may be seeing a movement up potentially as high as maybe 220, 230, maybe even higher on Alibaba. So something you possibly want to look at there for a trade on Alibaba. Oh, by the way, just so you'll know, I am trying to put together a list of everybody that's interested in trade alerts, and once I get the constant contact going, I'll be getting out to everyone. But for right now, the website dallastradingfloor.com has a comment section. And if you could just put your name and information in there and your question, and hopefully I'll answer it on the air. And we can get out to you. So that's a great way to go there too. Also, I'm putting together a sort of a trading tutorial kind of thing. But I've announced it, but I don't yet exactly have plans. I'm trying to bring on some staff and make that happen. So that's where I'm going there. All right. So let's see. Another question on TikTok. If the SPY breaks resistance, yes, very good, Bobby. If the SPY breaks resistance, keep an eye out for the 300, 310. Yeah, absolutely. Before it dips again, absolutely. I think that 308 may be the number on the spider there. I think that's really really a good really a good really a good try there. So let's see. I think I have somebody here on basically what's happened is that the market has tried to break the 300 range, and you're right about that. The 300 range basically being very key. And I do think that once it breaks that, we're gonna see it move higher. The next major band, I believe, on the spider is 308. What's happening, and this is what happens when a market trades sideways, is that it will move up, and then it will test, and then it'll move down, and it'll move up again. And when it breaks through that, that's really when you want to be a buyer. And that's the reason why I talk about buy points on individual stocks. Interestingly enough, ETFs function exactly like stocks, even though they're made up of a basket of stocks. So this works for ETFs as well as individual stocks. I keep talking about what they call the spider, and the reason I do is because the spider is the largest held ETF in the world, and it tends to be a very good indicator of where the market is moving. And so that's something that you've got to really keep looking at. The spider is very indicative of the rest of the market, and why I always keep an eye on it as well. So let's see. My 2 cents. Okay. TikTok. Thanks, man. 308. Yeah. I I I think this, I've been looking at this 308 level. I think it's really important. I think, if the thing breaks through 300 and then moves past 308, I think we're probably out of this recession. Now, if it doesn't, I think, we may be going back down and testing the low. Remember that the spider made its all-time low on March, I guess it was, yeah, March 23rd, and it was about 218 and actually got down to 218, which is amazing. It's come so far, so much since then. I mean, this really kind of shows the market. Now, here's the thing. I think that, once it sets in, once the country starts reopening, and I think it will definitely. I mean, it's here in Texas, we're starting to reopen. I think we're going to start to see economic activity start up, but there is a problem, and the problem is in the real estate sector, the way I see it, and in the financial sector. A lot of people just aren't going to be able to make their rent. And this is not going to be a good thing because, it's going to cause some issues in the mortgage market. So this is the reason why I think it's best to stay out of the financials, with one exception. And this is an exception that I always put out there, and that's PayPal, because I think it's different than a MasterCard. So even though they're going to be telling you on CNBC and stuff like that, oh yeah, it's such a great time to buy the banks. Don't kid yourself. The banks are going to be in a little bit of trouble until we get the economy fully opened again. They're going to have some problems with defaults, and even though they're in much better shape than 2008, I don't think you want to be in the banks, and I don't think you want to be in companies that have a lot of overhead debt. And this is basically companies like the Marriotts of the world, the Carnival Cruise Lines, anybody that has large mortgage payments basically borrow stock stock from your broker, and then sell it, and then wait for it to decline, and then buy it back later. Say, well, wow, how could you do that? I mean, that doesn't sound legitimate. How can you do that? Well, you very much can. Now, you have to have a level 3 options authorization in your account, which you can do now. And unfortunately, you do have to have about 25,000 in your account in order to short stock. Now, if you don't have that much money to deal with to short, there's another way you can do that, and that's using the shorting ETFs. And there are bear ETFs out there that typically go higher when the stock market is going lower. And the one I really like, of course, is the SQQQ, which is basically a leveraged ETF that, as the market goes down, the SQQQ typically goes up. So even if you don't have the ability to short individual stocks, you can short using these ETFs. And so it's a great way to do it. So that's how you make money in a down market. Now, how do you make money when the market goes sideways like it's going now? This is actually my favorite kind of market. The way you do it is you find stocks that are breaking out right before buy points, and what you do is you purchase them right before a buy point, and then you sell the call on the other side. Now, you can also synthetically do this with what they call a bull call spread, and I'm going to go over those as well. And that's where you buy two opposing options. You don't actually own the underlying stock. The disadvantage of the bull call spread is if you are wrong in too short a period of time, you won't make money. You'll lose money. But that's one of the reasons why I kind of like to do a actual covered call, because if I'm wrong on the timing, and I'm wrong on the timing all the time, then I have another chance to re-enter the trade and potentially make more money on that. So that's one of the reasons, but it just takes a little bit more capital. Let's see. All right. So let's see. Is it a beautiful cup and handle on the? Yeah, absolutely. By the way, absolutely, Bobby, this is a really good. Thank you for. I've been trying to kind of raise the red flag. I'm in AMD right now, and I'm probably going to increase my position. I have a option that's expiring on Friday this week. I'm probably going to be in AMD more. It's definitely one you want to be looking at. I think it's going to pop. I think you're absolutely right about this, Bobby. I do, because I don't have the chart, but I definitely want to show you the buy point. And I had that up earlier on my, oops. Okay. Well, let's see if I can show you the buy point on AMD. It's Alibaba. Okay, here we go. AMD buy point. It's a 58.73 entry. Now, if it's a 58.73 entry, that means that the buy zone is 58.73 times 1.05. That will give you the range in which you can safely buy that stock. And Bobby, I think, is absolutely right about AMD. I think it's a winner because there's more and more investment in data centers. Everybody's going digital. Everybody's going online. AMD is at the forefront of that. Intel's there too, but they're a little bit more mature stock, even though they're about the same age. Believe it or not, they're about 50 years old. Can you believe that? But I think that AMD is an excellent call. I think it's just at the right point. And if it moves to that 58.73 entry, I think you want to possibly load up on it. Do you day trade volatile stocks? Yes, I do. But I am not day trading now. And the reason I'm not trading now is because the market has moved into a different phase. I believe it has moved into kind of a sideways phase. as the nation reopens, we're going to see it move sideways, and in a sideways, you don't necessarily, you want to do what they call swing trading, and that's currently what I'm doing now. When the market is more volatile, when it's trying to break out or breaking down, that's when you really want to be a day trader. So what you do is you adjust your trading style to the market conditions. You never try to fight what they call the tape. So if the market is trending up, I'm not short typically. I'm going to be long in stocks. If market is trending down, I'm in cash. Right now, I'm coming out of a situation where I was basically, almost 100% in cash. I was making really short trades. I am now moving to a much more more positions, and potentially, if it's right, I'll move into a situation where I'm in a margin position where I actually move and I actually borrow to make short-term trades, because that's sort of, you want to size your trading. You want to do your trading style based on what the market conditions are right now. And right now, the market is moving sideways. It's moving within a band, and if it breaks out, then it's going to get more volatile. We want to possibly day trade it. If it goes down, we want to go into cash again and get ready to short. But right now, it's moving sideways, so the covered call strategy, at least for me, is performing the best. Hi, I'm used to. I am use IQ option. What is the best platform? Well, a lot of great platforms out there. Interactive Brokers has a great platform, I think. I don't currently use them. I use Charles Schwab and TD Ameritrade. I really like TD Ameritrade. One of the reasons is because of Thinkorswim. Thinkorswim was created, by the way, there's a great guy out there. His name is Sizemore. What is his first name? But he runs tastytrade. Great, highly recommended. I mean, he's a great options trader. He was from the options pit, and as a matter of fact, he created this company that created Thinkorswim, and then Thinkorswim got so many customers away from TD Ameritrade. TD Ameritrade bought them. So I really like their platform for trading and trading options. Just my thoughts. Tesla competitor. Well, there are some Tesla competitors out there. Nikola, which is making some trucks. I think they're making some good stuff. But here's the problem right now. I believe that the momentum, and I'm a momentum trader, is with Tesla. And why? Because Tesla has Wall Street's ear. Now, even though Elon Musk, a lot of people, think he's kind of interesting, but he has the ear of Wall Street, and they have the funding, and their momentum is with Tesla right now in the electric vehicle space. Now, here's one thing you've got to understand about Tesla. 10% of Tesla is owned by Daimler-Benz. So I suspect that as Tesla becomes more and more mainstream, you're going to see other companies basically license their technology. And I think Daimler is going to be one of the big ones that license their technology. Also, Toyota. Toyota also has a stake in Tesla. This is the reason why Tesla, as opposed to the other companies, I believe is going to be the long-term winner in the electric vehicle space, because Toyota has a stake in them, and so does Daimler. And that's really kind of where the market is. And I think that's very important. Now, the legacy players like GM and Ford, they're trying to get into the space, they have had a lot of R&D in the space, but I think unfortunately because of their legacy supply chains, they're going to have more trouble entering the space. I think that Fiat Chrysler, unfortunately, I don't think that they're going to do as well. Though Nissan was one of the early people in the space with the Nissan Leaf, which I think is a tremendous vehicle, even though it only goes to 80 miles. It only goes through a distance of 80 miles, but a lot of trips in this country are 100 miles or less on a day. So anyway, enough of that. Anyways, good. I want to say to everyone, thank you so much again for wasting another good day with me, but I so appreciate it. Please sign up for my mailing list. It's at DallasTradingFloor.com. Just put your information in the comment section. And by the way, I'll just put this up on the screen. My Periscope information, and hopefully next week I'm going to have better equipment. So hopefully if the internet, no internet outages and better equipment, maybe it'll look better online. I'm actually going to bite the bullet and get some decent Apple equipment for this broadcast, so hopefully it won't look so terrible. But take a look at us on YouTube. We're at youtube.com/Dallas Trading Floor. Also on Periscope at pscp.tv/Dallas Trading Floor. And of course, TikTok. Everyone loves TikTok. I do. TikTok.com/@JKML. That's my handle. So thank you again for your time. And I'm going to try to put up some instructional videos on how to trade certain markets based on the tape. If it's going up, it's going down, going sideways. Right now, the market seems to be going sideways. So that's the reason why